Hello traders, this is a trade site trade recap-ish video. We're going to go through the daily charts of a bunch of stocks and we're going to look at the trade site seeker tool and how the recent signals that I can find on various stocks have played out. Now what I want to say in advance is I scan a lot of stocks every night looking for chart patterns, and this is not about chart patterns. This is a completely different type of signal. It's one of the most powerful signals in the entire market, and this particular tool we use can not only work on a daily chart, but it can also work on a 5-minute chart, a 15-minute chart, a 30-minute chart. It's equally accurate on all time frames for anything you trade, stocks, futures, and Forex. So that makes it one of the broadest, most important signals in the market. And I'm going to just kind of briefly walk you through the simple version of looking at it and understanding what it's showing you. We won't get into all the nitty-gritty details. It can take hours to go through that. But essentially, when you look at a chart like this, you're going to see some numeric counts. These are green and red numbers that are measuring exhaustion in the stock or in the market. And what it means when you get to a 13 in the red numbers is that the stock is completely exhausted in that direction. So if the count is underneath the bars, it means we're exhausted to the downside, we should turn up, effectively a buy signal. If we're exhausted on the upside, if the count is above the candles, then we're exhausted moving up, and we should lead to a downside, effectively a sell signal. So I'm going to walk you through a couple of things here before we really get to it. But again, every stock I found in my scans on the daily charts for the last week or two that even had a 13 signal over the last couple of months, I went ahead and jotted the symbols down, and I've got them all here. So we can go through and look at, first I'll explain it to you, then we'll look at the ones that didn't work, and then we'll look at what did work. All right. So if you look at this chart of CENX, this is a great example to start with, just because over the last year or so, that there's about 8 months of data here, right? You can see there's actually 3 different signals on this stock. So you can look back in September towards the left side of the chart, almost in October, and you'll see the 13 buy signal. And look how we shot up right after that signal, right? And then more trading occurs. So that's your money maker from there. And then in December, another 13 buy signal. Again, we turned up off of that. So another money maker from there. And then finally in late February, early March, after a big run up, there's a 13 sell signal. Now I want to talk about some of the parameters of what you're seeing here. Whenever you get a signal, you're going to get a pink line, and that's called the risk line. Effectively, that's your stop out point. So in other words, on that last signal in February, that's a sell signal. If I were to sell short this stock, my stop loss would be if it closed above that pink risk line. Okay. Now, in this case, what you'll notice is there's a pink risk line there right after the 13 signal is formed. It gives you a very controlled amount of risk on the trade. This trade actually worked because it pulled back for a good month, month and a half, and then curled back up. The pink risk line remains until we hit one of 2 types of targets off of the play. So in this particular case, we never actually hit the target, but obviously you could have made money because it triggered short and then went down and was there for a long time in the money in terms of weeks. But it just never got to the actual technical target point. There's 2 target points that can be measured. So if you see one of these signals from a month or 2 back and there's no pink line, it's because what the target of the move was already covered, and therefore the risk line is no longer valid or relevant because you don't need to be in the trade anymore. And then you're going to have some cases like this where obviously you would have made money on the trade, but the pink line stayed a little bit longer because it hadn't quite reached the technical target, the full-on target that we're looking for, and then eventually was broken. Now, once the pink risk line is broken to the upside, meaning we get a close above it and then trade above that candle the next day, then the pink risk line becomes dashed, which is what you see here. Until that happens, it's a solid line. So what we're looking for is 13 signals, and let's say it's a stock that moves up and gets a 13 sell signal. Then you're going to see a pink risk line. And the question becomes, what percentage of these trades lead to a move, in this case, to the downside, and what percentage of them break the risk line and actually get stopped out? Now, before we get a little further into the specifics of that, I want to give you an example here. The CRUS, look at this. So here you get a 13 sell signal, right? And you do start to head down, but you don't go down enough to meet the technical target. Looks like there's some news one day. And see the big spike up on that? And look how we hit exactly that pink risk line. What a lot of retail individual traders don't understand is that this is an institutional grade tool. This is what the big money is using. So these measurements are really specific. And that's why you see something like that happen. And so it gets all the way up but can't get through that line. It doesn't stop out of the original sell signal. Now, obviously, this is a daily chart. If this was a 5-minute chart, you'd maybe be more relevant. Here, you might have taken the profits anyways along the way because as the trade's moving down, we're either probably lowering our stop or taking pieces off. But just from a technical conversational perspective, 13 sell signal, started to head down, some kind of news spike, runs into a wall at the risk line, never fails at the risk line, meaning never gets above it and closes there, and then rolls back over. So that signal is still in effect. So I'm just explaining that that's how that works. Also, here's an example of a 13 sell signal on Logitech. You can see 2 days later it actually gaps down. The risk line is still there and it's solid. Why? Because we haven't yet hit the ultimate target, but of course you're in the money and you're making money and you'd be moving your stop or taking pieces of the trade-off. So again, a profitable trade, the risk line is still there in that particular case, as opposed to this one where we got a sell signal back in late March, which was the top day there on the ARCB. And there's no pink risk line because in this case, it has already moved down and hit what would have been the technical target of the move. And again, I'm not going to get into the complications of what the targets are, but if you don't see the pink line, that's because it actually hit the technical target. Not just that you could have made some money, obviously, because it went down, but actually got as far as it needed to get to erase the what's called exhaustion. A couple more examples. Okay, here I'm going to show you the trades that did not work that I saw. Okay, so for example, SEIC, you can see that 13 sell signal goes sideways for a couple days. You can see the pink risk line that's dashed, breaks back above it. Boom, that's a stop out trade. Granted, it's kept to a very tight, relatively speaking, stop loss when you're looking at the chart, but it did absolutely not work. It stopped out. Hain, another one. This is triggered. Now, yeah, okay, it pulls back a little bit for a couple days, but then, and probably some news there on that volume spike. But again, I would definitely classify this as a trade that did not work. Broke above the risk line just today, yesterday actually. IBKR, here's another one that technically did not work. It got a 13 sell signal. It hit the risk line and rolled over, but then a couple days later it was back there and it actually did just barely close above it and then take out the high of that. So even though now it's rolling over, that's a failed signal. You would have stopped out of that trade. So that's an example of one that did not work. Here's FANG, F-A-N-G. This one got a signal, and you can see, again, it did go sideways for a while, and it took it until the end of that pink dashed line before it really broke the signal. But I would say this is a trade. I would just call it a trade that did not work. Okay, and MANH also. Take a look at this one. 13 sell signal, and this one actually gapped up. This is the worst case of all of them, right? Because not only does it, and you should know if there's earnings coming out, you wouldn't hold a stock through earnings anyways, which is probably what that was. But you get the sell signal. If you just went short and didn't know the earnings were coming, we don't hold stocks through earnings, then this is the worst case example because you can't just stop out of the trade moving through the pink line because it gapped up and over. All right, so those are the ones I found that didn't work. I believe that was 5, right? 4 or 5. And I think now you have just an understanding of what to look for. So let's just go through and see what else we can see in the market over the last few months. Now, these are both, I'm taking both directions, buy and sell signals. You're going to see more sell signals because the market has been up. Therefore, more stocks are up. Therefore, they get to the point where they have a sell signal, an exhaustion sell signal. But there are some buy signals, and I want to show you that here. This is one, Sage. You can see the 13 buy signal. You can see the risk line. You can see we did sweep it one day, but again, using it as support because that's what that is, as a measurement. That's where the institutions step in on that signal if they get the chance, if it comes back, and then obviously higher from there. So that's a trade that worked. Take a look at Rambus. Sell signal is basically the high print back in March, and here we are, and it's basically hitting that red line. It's essentially fulfilling what it needed to. So this is the end of that trade. It did well. Big winner in Rambus. Let's take a look at Costco. I love this. Look at that trade. The move up. Where's the 13? Right at the high print, right? And we're down ever since, approaching the red line, which will be the target in this case. Never came near the pink risk line at all. Here's one. This is a buy signal on ARRS. You can see the signal right at the beginning of April. Curled up, and we've already hit the target range here, which is the green line, so the risk line's gone. Look at this one. TREE, T-R-E-E. Look at that sell signal. Look at one more day up after the signal, hits the risk line almost to the penny on a $110 stock, and then rolls over. So that signal worked well. Mattel, old school stock. Here's the, look at that signal. 13 sell signal on the high day. Look at all the count that gets you there. Remember, this signal count starts in February, and you don't get to the 13 until April. It takes 2 months to get the signal, get the energy so ramped up in the stock that it's completely burnt and has to roll over, and then boom, it rolls over. It never comes near the risk line in this case. PCRX, here's a buy signal, almost the bottom day, and then the move up. No risk line here because it went high enough up to definitely fulfill the target of that move. PENN, P-E-N-N, 13 sell signal, just starting to roll over here now. ARMH. Look at that, 13 sell signal, heads lower. PODD, P-O-D-D, 13 sell signal, went sideways for a while, but again, the risk line is the stop out point. never quite got there, and then finally rolled over and accelerated to the downside with some energy. eBay, a spike up on earnings. That's the sell signal. That day is the 13 sell signal. It's been down ever since. WMGI, that was a buy signal. You can see the risk line. It touched it but never closed underneath it. Curled up. Now it's in the money. A working buy signal on the WMGI. Paychex, 13 sell signal. Once again, right at the high print, rolling over here. Still hasn't gotten down to the ultimate target. So there's still a risk line in place, but it's obviously working and in the money. And you're managing that trade properly. Look at this Xilinx, 13 sell signal, and the very next day shoots down to the downside. Great winner there. Logi, LOGI, another one, sell signal, one day down and then a gap down. So that gave you an idea something was coming. Very good measurement of the energy there. Oh, that's Logitech. I already showed you that one in the prior examples. This one, you're thinking it's about the sell signal and the fact that we're down the last few days, but that only actually got to 11. There's no sell signal yet. This is about the buy signal that was prior. Look at that. Buy signal back in March and basically hits the low, and we curled up off of that. That's ADMS. Another one I found, PCRX with a buy signal. You can see the move up there. Pretty solid. E-Trade, sell signal about 2 weeks ago. Risk line, doesn't come near it. Rolling over now, still in play from that perspective. Rovi, you gotta love this one. This is a stock, a computer gaming stock. Look at that. Up solidly from December all the way to March. Big move from like $11 to $24. This thing calls the high within a day. And now we're back halfway back, giving up the gain. Even something like Microsoft. This is way back in December. Look at that. Microsoft getting a sell signal a couple days before the middle of December, let's call it. And then the pullback that you got from there, it's fulfilled that. So there's no risk line left. ODFL, look at this. Sell signal, pulls back for 2 days, shoots up, hits the risk line exactly, does not get through, and then gaps down. The signal works. FGEN, I have to widen this one a little bit. The buy signal is actually, you can see where it is, and it went up from that point on. CBOE, another one. Look at the buy signal. It's not the low day in this case. The low day is the 11th bar, and then there's a 12, 13. But from the time you get to 13, you do head up. So that's pretty interesting. SIMO, sell signal maybe a week ago, and it went down since then. Risk line still in play. ESPR, look at this one. Look how flat it was, and yet it managed to get an exhaustion signal. And once it does, you see how it starts to drift higher anyways. It's not a big move, but it goes from like 15 to 20. Still a 25% move in the stock. 5, FIVE, 5 below. Sell signal about a week and a half ago. Rolled over. Yahoo, now this one's really interesting. Never got a close above the risk line, even though it played with it. This one's still in play in theory, but it got the sell signal. It played with the risk line. It's still right where the sell signal was. Hasn't really rolled over yet, but still has not broken the signal. SRPT, you can see the sell signal back at the end of March. You can see the plunge that happened after that. This one already hit the full-on technical target. Even Cisco, look at that. Cisco sells off right after it, and then look at this, Tesla. Boom, sell signal, hits the risk line, can't get a close above it again, and now rolls over completely. I'll also point out a couple of stocks, if you look at them carefully. Amazon had a sell signal, a 13 sell signal back at the end of the year. Look back in December before the stock sold off sharply in January. And also Google, it's not Google, what was it? Google has one that didn't really work. I believe there was another one of the big name stocks that had a sell signal late in the year. Was it Apple? No, Apple hasn't had one in a while. See, a lot of stocks can go a lot of time without having any. At any rate, a lot of success using this tool. I would call that, let's see, it's about 30 that worked versus about 5 that didn't. We say that this tool is a 70 to 80% win ratio. That includes on smaller time frames. We use it intraday for day trading purposes as well. But again, this is a powerful signal in the market, and if you'd like to learn about it, please contact us. Have a great trading week.